chairman of the LPV Technologies. The visit is a testament to the company's world-class production facilities, stringent controls, and premium-grade raw materials.
The beauty about solar, I always say to people, having had some background in the power sector, is that it can be deployed literally anywhere without the concerns of transmission and distribution, as it were. You can go to the remotest village in Bayelsa or in Maiduguri and deploy the mini grid there and give people light. People often wonder, when people say that, what's the biggest challenge in Africa, especially in a country like Nigeria? Sometimes you hear people talk about corruption. And I often laugh, and I say to people that, well, corruption did not stop the likes of Burna Boy and Wizkid from excelling in what they do. What the biggest challenge is in this country, to my mind, is energy security, the availability of power. And that's what we have set up to try to address. Because with the cost of diesel and the effect on the environment, we feel that if we are able to provide alternatives, then people can, affordable alternatives, working with multilateral agencies and our financial sector, and especially our partner here in the Rural Electrification Agency, we think that we can make our own little mark in the sector.
Unlocking the future of digital payment. Value of acceptance, brought to you by Visa.
Discussing value of acceptance. Now let's share some findings by Visa. So Visa finds that in their report for 2025, they found that 83% of merchants in Nigeria believe that digital payments are important investments for growth. They also find that the lack of digital payments adoption is hindering sales growth for cash-only SMEs, and 44% of these businesses report lost sales because of customers not carrying cash, emphasizing the need for digital payments. As then familiar payment models in Nigeria, of course, we know ATM, account to account, but this can be strengthened too through modern payment technology like contactless payments, digital wallets, biometric authentication, and so on. Let's discuss more about this now with the Chief Executive Officer of Semicolon, Mr. Samuel Emmanuel, joins us from Dubai. Mr. Emmanuel, good morning and welcome to the program.
Good morning and thanks for having me.
So let me first of all ask you, as an active player in the digital payments fintech space, how would you rate the level of improvement and acceptability of our ecosystem, our payment ecosystem?
Thanks. I mean, if we look at the transitions that we've been seeing in the economy more and more into services, and specifically more and more into digital services, those have also been enabling and helping drive the increase in adoption of electronic payment services or digital financial services. And as those happen, essentially, it means that people are having more opportunities to pay for things digitally, which means that the players in the industry now have a lot more sort of, let's call it demand that they need to address, which then means that they need to make a lot more investments in the underpinning infrastructure that is essentially enabling those services. So all in all, I think as businesses have digitized their offerings and digitized the channels through which their customers access those offerings, it has created more opportunities for digitization of financial services, which in turn has helped many more players invest in the infrastructure. And of course, we can't forget the fact that Nigeria as a company through, as a country, sorry, Nigeria as a country through the CBN has, of course, been promoting and pushing the cashless initiatives.
Yeah, but some people still believe that cash is king. Have we been able, or are we making a lot of progress in eroding that perception that cash is king?
We're making progress. Of course, cash is king in the sense that, um, there's cash, there's debt or credit, as the case may be. So you can have cash, i.e., in the bank, you've got money. And so the point is that we're actually transitioning more and more people to saying that they can still consummate transactions not using cash. Of course, a lot of the adoption has been more in urban areas. I was still speaking with somebody some weeks ago where he was saying in his village there's no service point and people still have to travel quite a far distance. But despite that, because if you look at the statistics that NIBS shares quarterly and annually, we're still recording about 88, 89% in terms of volume and value of transactions that are going digitally or through electronic channels. So we are definitely making progress. And at the same time, we still have quite a large number of people that have not been reached. So it's a mix of both, but definitely we are making progress.
So when Visa says that they find that about 50% of merchants prefer to receive payments digitally, I guess they are not talking about the open markets, or those, as you noted, those in the rural area, even in a state like Lagos, some parts where they don't have those points. So, I mean, what do you think about this 50% of merchants prefer payments digitally?
So one of the things that we still need to acknowledge and address is the cost of financial services is still a lot higher than what it needs to be. In many cases, people are paying to pay. So if I want to pay a merchant for something I'm buying, I'm paying for the thing I'm buying, but I'm also paying him for buying what I'm buying, if that makes sense. And so that cost of transaction, the cost of the payment services, is also part of why people are trying to avoid some of these digital solutions. Because if I have cash and I need to pay somebody 1,000 naira, the total that I'm going to give that person is 1,000 naira. If I pass it through a digital channel, it will be maybe 1,000 naira, 1,025 naira, or 1,050 naira. And if the transaction value is slightly or much larger than the 1,000 naira example, the cost of that transaction becomes a lot more. And so for people who are on a budget, for people who are sort of managing their finances, they notice these associated costs of transactions. So I think that's part of what is being referred to, that merchants look at some of the costs that come with them accepting digital payments, and so they try to avoid it. But again, the other side of it to note is there's a risk of taking cash that is reduced once you go electronic, right? And so I think those are some of the things that are not fully considered when people are looking at all of those.
Like we would need the intervention of the regulator, to make it more attractive and less expensive.
The investment in the technology infrastructure that supports many of the financial services, the cost of those things are expensive. And the cost of those things, one, they're expensive. Two, they're typically denominated in foreign currency. Meanwhile, the revenues that the players make are in naira. The regulator has already sort of intervened and provided some caps above which the providers cannot go. So the issue is that I think there's still some business model reconstruction that needs to happen, because if you're doing payments, it's essentially volume uh, business. It's a volume game that you need to be able to process at certain volumes for you to be able to cover a lot of the associated costs. So I think the regulators have tried in terms of helping to bring down the cost. I believe they're still looking at ways to do that further. But then for the operators themselves, they are also facing the reality of what it costs for them to provide that service. And so there has been a proliferation of providers in the space, and maybe at some point some consolidation may help with the economies of scale to then start helping with the margins that essentially will help drive down the cost.
All right, so this also finds that between 2015 and 2019, increased usage of payment cards, debit card, credit card, and all of that added about 245 billion to global GDP across 70 countries and territories. I wonder if we have an idea how much of this came to Nigeria, or how much more we are missing, because of some of these things you've talked about, in spite of the intervention of the regulator.
Yeah, so in terms of the what percentage of that came to Nigeria, I'm only going to do a guess or do some extrapolation. But as I said earlier, if you look at the trend over the last few years, NIBS has been sharing some data. Essentially, the digital payment space has been growing 88, 89% uh, year on year. And so if we use that to extrapolate, easily that $245 billion that Visa is reporting, I think they said it was across 70 countries. Easily, Nigeria should have seen somewhere between $500 million to $1 billion of that as a net benefit to Nigeria.
Hmm. All right, and then some of those familiar, forms or platforms that are being used, but it does seem like the contactless payment is we're not getting it in this country. At least not spreading as much as one would have thought. What do you think is going on with that?
Yeah, contactless. I mean, when you look at the payment sort of landscape, and you think about converting people from cash to electronic payments, then of course we need to start thinking about what are the channels through which people are going to do it. We've gone through telling people to do transactions via the web. We've gone through telling people to do transactions using USSD. We've moved on to now many people doing transactions through mobile apps. And so contactless payments, whether it's using cards, whether it's using devices, is essentially sort of part of that journey of evolution that already it took us a while for us to even get people comfortable with adopting a number of the electronic services. But if we just continue to let things evolve in their natural course, the contactless will also essentially come to fore. That it just takes time in terms of adoption and in terms of people getting comfortable, because of course it's money. And one of the things that we need to acknowledge is that the incidence in terms of volume and value of fraud in the system has been kind of high. And so for those reasons, some customers have some, let's call it palpitations when they're doing certain transactions, which may also uh, be a factor in what methods or channels they choose to adopt. But I believe that as we carry on that journey of evolution, contactless would also become a major part of the landscape.
So how long do you think, Mr. Emmanuel, it will take us to have these forms of digital payments, especially in our open markets? Many years ago, when I went to South Africa, in the open markets, you can do digital payments. You don't need cash. But I mean, you mentioned one factor there, the issue of trust, of adoption. You know, that's one of the hindrances we have to face. But how long do you think, how many more stages do you think we would go through where we can actually have a cashless, truly cashless market? I'm talking about the informal, because that's the biggest part of Nigeria's economy.
It is already happening. It's just not happening directly. Because what you see now, I mean, you can try this out. You go to any market, Oshodi, Oyigbo, any major market, and you want to buy things in the market, and let's assume you're going to be spending up to 100,000 naira. The person you're buying from may, like you were saying earlier, say, no, I'm only accepting cash. And what you're going to find is there will be a money agent very close by. You go to the money agent, you collect the cash, and then you give the cash um, to the seller. So two things. That one is that the uh, digital payment is already a form of transaction in the market. The issue is that it's not a form of direct, or if you like, a peer-to-peer transaction, that there's still a middleman in between. So really the question is, how long will it take us before we no longer need the middleman? Because in fact, uh, the middleman being there is part of what's also adding to the cost of transaction. And so the I guess the reliability of the systems, the trust level that people continue to gain over time will lead to us not requiring as many uh, middlemen. And then that would then lead us to this stage where you can then do the transaction directly with the seller versus through. So my point is there are two stages. There's a stage where you're going through an intermediary, and then there's a stage. So the first stage is already happening. We just need a bit more time. And so when you say how long before we're fully there, I'm going to certainly, I think it will be on less than the next 5 years. If I'm going to do a strong wager, I'll say 2 to 3 years.
Well, that'll be beautiful, I tell you. But I guess we also have to look at the reality of our payment structure, infrastructure in that ecosystem. Sometimes we do know what happens, you know, with all of those payments, and that is also, you know, at the bottom of some of those distrusts in adopting some of these new or digital services or systems.
Yeah, so some of the issues around trust is not just fraud, it's also the uh, tendency that if there, I think that's part of what you're alluding to. If there's a transaction failure, the amount of hoops people need to jump over for them to get the transaction reversed or get their money back. And if somebody is trying to do a transaction and it's worth 5,000 naira and they've just got 5,500 naira in their account, if for whatever reason something goes wrong with that transaction, they don't have another 5,000 to do that transaction again. And so if it takes days for that transaction to get reversed, the person is essentially stuck for a while. And so part of the evolution and part of the things that we need to address in relation to the infrastructure is the reliability of transactions. Reliability in terms of we can consummate one way or another. If it is successful, it is consummated successfully. If it has failed, we consummate it as a failure such that the person that initiated the transaction does not have a loss of value or value hanging in limbo for an undetermined amount of time. So I think those are some of the critical sort of frictions that are inhibiting people from essentially going all the way with adoption.
All right, thank you so much for your insights, Mr. Samuel Emmanuel, Chief Executive Officer of Semicolon.
Thanks for having me.
Let's take a break. We'll be back.
Unlocking the future of digital payment. Value of acceptance brought to you by Visa.